Well done, my bookkeeping bosses. Now, before we wrap things, I just want to leave you with this last thought. Remember earlier when I said that the accounting equation was like a scale? Well, thinking of it this way will provide you with a quick health check on your client's books. For example, as you're going through the books, if you find that the scales are tipped and the accounting equation isn't balanced, well, you know right away that something is off. When that happens, it's time for you to put your boss detective hat on and investigate the journal entries to determine where the issue is. Let's hear from an expert with some really great advice about determining accounting errors.
The accounting equation is really important because everything must balance. There always must be debits and credits that total the same all the way through an accounting period. And if it doesn't total and something's not right, it is really obvious looking at the balance sheet. And the balance sheet is basically the accounting equation with all the sub entries that total the assets, that total the liabilities, that total the equity. So first thing you would see if a balance sheet was out of balance is you look at the total equity, total assets, and then you look at the total liabilities and equity combined. Those two numbers should be identical. And if they're not, there's something wrong. So now it's time to start digging into the weeds and figuring out what's wrong. Really depends on what system you're using. If you were using spreadsheets to create journal entries that translate to trial balance, that translate to the balance sheet and the profit and loss statement. If you're doing all this manually, it could be a formula, it has broken, something like that. So I would definitely double check that trial balance and make sure the debits in the credit column match or have the same amount. And from there, I'd push forward to the balance sheet to make sure all of those totals have come across with the correct number. You really have to do some research and dig in, like I said, to the weeds and get in there and figure out which balance is not translating over. And that is how you can start figuring it out. Now, for me, I use accounting programs because accounting programs have those formulas written in, and they generally do not break. It's something that happens automatically. So, if you don't have to do it on a series of spreadsheets in a workbook, I recommend using an accounting program that actually does those translations of those balances for you. But in general, the assets should be the same as liabilities and equities combined. And if they are not, you've got an out of balance set of books and it's time to start looking.